Hello friends. Today we are going to discuss on one of the very important subject which is related to banking industry. We need to know what are the services that is being provided by the bank. What services are generally being provided by the bank? We need to understand that bank as an organization is not dealing in any tangible product that you can touch, you can feel. They are not dealing in any such products, right? They are dealing with financial products which is intangible. You cannot touch it, you cannot feel it. What do? They receive money from an individual or governments or businesses, and they deposit money or they lend money to another individual, businesses or government bodies in case they need it, right? So it's nothing but receiving deposits and lending out the money and facilitating the uh, transactions and playing an important role in the economy to ensure that the economy runs seamlessly. So let's understand the banking services banking services. So what are the banking services? Now, as we discussed, banking services may include accepting deposits, lending money, facilitating transactions, and dealing in other financial products. It can be savings account, it can be loans, credit cards, etc. And now, if you will see here, it's clearly mentioned that it plays a crucial role in facilitating the flow of money in the economy and enabling the economic activities. So let's see where the deposits generally happen. You must have been to a bank's branch, and you see that a man is there sitting at the teller. He is accepting money at teller. So an individual can deposit money by going to a teller in a branch, or he can use CDM machines, which is cash deposit machines, and he can deposit money through CDM, right? You must have seen that there are all the banks, they are giving loans to an individual, to SMEs, so that they can run the economy seamlessly. Okay, so giving loans or credit facility is also important. Now, they need to take care of the transactions too, right? Making the payments, accepting the payment, that also becomes a part or individual product of a bank, right? Now, let's understand about the deposits, the basic deposits which a bank accepts, right? So, if you talk about deposits, bank accept deposits through various forms or through various types of accounts. What are those accounts? Number one is savings accounts, right? So in savings account, what happens is an individual can deposit money or withdraw money from his savings account, and whatever money that is there in savings account, a bank pays an interest on that money, right? But there is no bonding by the consumer or by the customer that he has to fix that money for a certain period of time. He can withdraw any day he wants, he can deposit any day he wants. So the deposit and withdrawal are ongoing, and whatever money that is available in the account, by probably end of the day, a customer gets an interest on that, right? That interest can be quarterly, semi-annually or annually. Then you have CDs, certificates of deposits or fixed deposits. In this scenario, a customer can deposit money into the account for a stipulated time frame. He can deposit or he can fix his deposit for 3 months, he can fix his deposit for 6 months, 1 year or multiple of years. And he gets an agreed rate of interest for the deposit he has done. Bank always notifies what interest is going to give to the customer for what time frame. So certificate of deposit is like, your money will be blocked for certain period of time, and if you're withdrawing the money before that, then of course customer has to pay a penalty, right? third one is checking accounts. A checking account is provided by bank or credit union where a customer can deposit money or withdraw money. Okay. Now the deposit, you have already understood how bank is doing or how consumer is depositing the money in the bank. But when bank gets the money from the customers or consumers, he's not going to keep the money with him and it will be, lying there idle. He has to use that money. He has to invest that money. And where he can invest money or where he can use that money, the bank will give that money to the needy, the person who has a requirement of funds, right? Or to a business who has requirement of funds, or probably at times to the government. Okay, so the bank gives out money to an individual or to corporates or to businesses in the forms of loans and credit cards. So here you see the bank is giving out the loans, and there are different types of loans. Now we are going to study about what are the loans that bank is going to provide. Number one is mortgage. Mortgage is something where bank gives money to an individual to buy a home. Of course, it's really very difficult for an individual to spend millions of dirham to buy a loan, or millions of rupees to buy a loan, or millions of dollars to buy a home, right? So a person or an individual can pay a certain amount of money, whereas the lump sum amount of money will be taken care by the bank itself, right? Second is education loan. Education is a very significant part of every individual. Education is something that is a dream of every parent, and every parent wants to provide the best education to their children, right? Even if they have to go and take a loan from a bank, they do take a loan and pay a certain rate of interest to the bank. Business loans. So generally there are a lot of businesses who request for a loan so that they can run their business seamlessly. Probably, if a business is into trading and they need to supply certain materials to their consumers, so to ensure that the supply happens, they can take money from the banks, or if a bank or if a company is into providing services or into a project, then to fulfill the project, they need money from the bank. They take money, complete the project, earn profit, and pay the bank with the agreed rate of interest. Who doesn't want to drive a good car, right? But that doesn't mean that if I need to drive a good car, I have to wait to ensure that my savings are so much that I can buy a new car or a used car. But if a person intends to buy a car, he can purchase a car, take an auto loan, pay certain amount of money from his pocket and take remaining amount from the bank, and he can drive a car of his dream, right? Based on the necessity or luxury, but he can buy a car with the help of bank. Correct? So you don't need to wait for you don't need to wait to save money, enough money to buy a car. So you see an individual, what happens is whether he wants to go for a good education, whether he wants to buy a home, or whether he wants to buy a car, or if he has a business and he needs to run his business seamlessly, he can take money or he can take loans from bank and ensure that his dreams is fulfilled, and bank earns a profit. So the difference of interest which a bank pays to the consumer while accepting the deposits, and the interest that he earns from the consumer when he gives him a loan, is what becomes a profit for the bank. In a coming future, we will be coming up with more videos which is related to more products and services about the banking. For the moment, we will stop our chapter on what are the services of the banks right now. If you have liked the video, please do subscribe and don't forget to press the bell icon. See you soon, guys. Enjoy.